So again, I got a lot of great feedback based off of yesterday's video when it came down to the history lesson with Ricky Gutierrez, right? We were talking about Russia, and again, it's very unfortunate to see the overall tension. I was trying to shed some light on it. With that being said, we talked about the influence that Russia has, being one of the biggest producers of oil, and the influence that it would have to overall major markets, right? Not only is this influencing the United States and our public markets, but it's influencing Russia's as well. And this is actually something that I wanted to share with you guys, is that I'm sure Putin is aware of it. I'm sure Putin can take the hit, right? Maybe a little bit more than we can. But one of the things that you have to understand is that Moscow's index today alone hit lows or lost 20% already just on the start of since the start of the year. It's lost 20% just off of that specific index. With that being said, it is to say that if Russia were to invade Ukraine, if it were to attack Ukraine, that United States and its allies would create a blockage towards Russia. And what does this mean exactly, right? These articles make it seem super complicated. The way that I understand this is that Russia is a huge exporter when it comes down to oil, producer of oil, and a huge exporter of natural gas. They would make it difficult for Russia to continue to export these specific commodities. With that being said, they would also create some form of blockage when it comes down to its banks and blocking it off, and its financial systems, making it more difficult for Russia to stay afloat. And how much of an influence would this blockage actually have on Russia? Well, it's to say that if Russia were to attack Ukraine, this would actually cause a drop of about 5% off of their GDP. And again, it might not sound like a lot, but when you're talking about trillions and trillions of dollars, it's actually quite a bit. And again, this doesn't only affect Russia. This is why I actually wanted to talk about it. With that being said, I actually want to share my screen with you guys. And what I want to talk about is today we hit nearly $100 a barrel for oil. And that's already very overpriced. So what I thought I would do is, obviously we know that if one of the largest producers in the world, Russia, if it were to go into war with us, obviously we're not going to be importing all of their oil. That means that it's going to be more difficult for us to keep up with demand levels, and therefore, if the import companies have to pay a premium, then so will we. So California, if you thought that you were paying a lot, I'm sorry, but it can get a lot worse. And it's to say, based off of an article that I read, that today we hit highs of $99 per barrel. And it is expected that if Russia were to attack Ukraine, we can hit highs of 140. That is a 40% gain in oil. That is, again, I hope not. But if Russia were to attack Ukraine, then we can see where the blockage is put in place. We have to import oil from other places, right? And with that being said, it's going to cost us a little bit more, especially if we're not working with one of the biggest producers. This is why, just like I told you guys based off of the other video, I got you. I wanted to create, not that I hope we don't need this, I really hope that we don't, but this is a list of 5 either ETFs or stocks that are oil-based, meaning that the thing that I really like about them is that these are very bullish. They've been very bullish. It's the opposite of tech, right? If you've been asking, well, what stocks, what sectors have been increasing in value as tech stocks have been pulling back? Oil has been doing really, really well. B&O, very bullish, very overpriced, very expensive. But guess what? If we see an attack, then it makes sense on why B&O can continue to make new highs. Again, just something I'm sharing with you. USO, one of the largest, right, funds when it comes down to tracking United States oil. You can see that it's been very bullish, very consistent, hit highs of $68. And guess what? It's not cheap. I'm not here to say that, oh my God, we should buy into this. This is cheap. I want you guys to understand what can go up even higher if we do see the attack from Russia to Ukraine. I hope, for the sake of Ukraine and Russia and everyone, really, I hope we don't see USO shoot up. Because if you do begin to see USO shoot up, it's unfortunately most likely going to be because of this attack. USL, a little bit less volume, but very consistent, very bullish, which is something that I personally find very attractive. Again, there was other ETFs, there were other stocks that just didn't meet my criteria because they weren't as consistent. WTI. Again, we hit highs of nearly $5, right? $4.77 based off of previous highs. That's a pretty high price point. I hope we don't see WTI, which is huge. Look into it, which is huge when it comes down to oil. I hope we see it pull back. But if we see it break $5, then it's most likely going to be for one specific reason. And the next one is going to be ticker symbol MRO. Consistent uptrend pattern, a healthy amount of volume. We hit highs of $23.27. And what is one thing that all of these have in common? They almost all hit all-time highs during the pre-market session. Look at that. Almost all of them, pre-market session, pre-market session. What happened during the pre-market session, right? I wanted to show you guys this flex grid, and I want to show it on the 1 minute time frame. I'm going to pull up TQQQ, which is the NASDAQ index, right? The triple leverage index. But one of the things that I wanted to show you is that, look at this. This is WTI, which is the oil-based. This is TQQQ, which follows the NASDAQ market. Right at market open, we began to rise, as in tech. The market began to recover. Oil began to go down. And what time was this? This was right around 10:30. Oil prices began to somewhat consolidate, right? And then we begin to see TQQQ begin to pull on back. Not only with just this, but also with United States oil. So again, looking at United States oil in comparison, so let me actually compare these two. So it's actually going to be TQQQ right on over here. And we can see that, again, where's the correlation? We can see that right around 10:30. 10:30, 10:45, United States oil began to recover, and that's exactly the same time that we saw the overall markets begin to pull on back. I am not here to say that, oh my God, everyone should invest in this, right? At the end of the day, you are entitled to your own opinion. I just want to make sure that you guys know that I try to have your back. I want you guys to understand that if things do get worse, what sectors increase in demand, increase in value. And I think that's just simply my part. It's sharing this information with you guys in effort to prepare. I hope we don't have to transition into trading oil at these very high prices. But guess what? Money has to be made, right? And if we begin to see this attack take place, then unfortunately we will see most likely, again, oil prices go up even further, even when they're already super, super overpriced. I hope that you guys learned something new in this video. If you guys did, please destroy that like button. It really helps out the YouTube channel. And then also please consider subscribing if you guys haven't done so already. We had a very, very interesting live trading session today, and I would love to invite you to my live trading session tomorrow. If you like the way that I break things down and you want to see the way that I trade every single morning at market open, it's exclusive to my Learn Plan Profit Group. There's a $50 off coupon down in the description, and that's that second link down below. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take it easy, team.